In 2015, a group of the most powerful people in Silicon Valley signed a legal document. They promised the world something rare. They promised they would build artificial intelligence, the most consequential technology in human history, and they would do it as a nonprofit. No shareholders, no profit motive, for the benefit of all of humanity. That organization is now worth $852 billion. It charges you $20 a month. It charges businesses $200 a month. And right now, today, in a federal courthouse in Oakland, California, a trial is underway that is asking one very specific question. Who owns what was supposed to belong to everyone? Daniel is a software quality assurance tester in Columbus, Ohio. He makes $67,000 a year. About a year ago, his company told him he needed to use AI tools to stay competitive in his role, so he signed up for ChatGPT Plus, $24 a month. He doesn't know that the company behind that subscription was originally incorporated as a public charity, one that was legally prohibited from generating profit. He doesn't know that Microsoft invested $13 billion into it. He doesn't know that an $800 billion valuation was built on a foundation that started with a promise to him, to everyone, that this technology would never be owned. And this didn't happen by accident. In the next 20 minutes, you're going to see exactly how a charity became a corporation, step by step, decision by decision, and why that conversion has a direct cost to every American who uses AI today or will use it tomorrow. This is not a story about Elon Musk versus Sam Altman. I want to be clear about that right now. Neither of these men is the hero of this story. This is a story about a legal structure, a specific kind of American nonprofit, that was supposed to hold a powerful technology in public trust, and the very specific sequence of decisions that unwound it. 4 chapters, 10 years, and $800 billion. Let's read the ledger. Here is where this system works against you right now. OpenAI charges American consumers and businesses somewhere between $20 and $200 a month for access to ChatGPT. That is a subscription to a product built on publicly subsidized infrastructure. When OpenAI was incorporated as a nonprofit in 2015, it received something extremely valuable: tax-exempt status under U.S. law. That means the donations it received, including $38 million from Elon Musk, were written off as charitable contributions. American taxpayers subsidized those donations. You subsidized those donations. That nonprofit status also made OpenAI deeply attractive to talent and to partners. Researchers joined at below-market salaries because they believed in the mission. Microsoft structured its early relationship around a nonprofit partner. The entire foundation of this organization, its credibility, its talent pipeline, its early capital, was built on the premise that nobody was going to get rich from it. Today, its CEO is worth, conservatively, several $100 million, and it is planning an IPO. But it didn't start this way. In December 2015, in San Francisco, a group of 11 people announced the formation of OpenAI, among them Sam Altman, Greg Brockman, Ilya Sutskever, and Elon Musk. They committed $1 billion in pledged funding, and they published a statement that is still on the internet today. It reads, "OpenAI is a nonprofit artificial intelligence research company. Our goal is to advance digital intelligence in the way that is most likely to benefit humanity as a whole, unconstrained by a need to generate financial return." Unconstrained by a need to generate financial return. That sentence is the legal and moral foundation of everything that follows. The founders were not naive idealists. They were some of the most commercially successful people in the world. Musk had already built PayPal and Tesla. Altman was running Y Combinator, one of the most powerful startup incubators on Earth. They chose the nonprofit structure deliberately. They chose it because they believed that artificial general intelligence, the kind of AI that could rival or exceed human cognition, was too dangerous and too consequential to be owned by shareholders. That was the bet. That was the promise. Here is where it changed. In 2019, just 4 years after that founding announcement, OpenAI restructured. It created a new entity, OpenAI LP, a limited partnership, for profit. They called it a capped profit structure. The idea was that investors could earn returns, but only up to 100 times their investment. After that cap, all remaining profits would flow back to the nonprofit. It was framed as a compromise, a way to raise the capital needed to compete in AI without fully abandoning the mission. Microsoft invested $1 billion that same year. And then ChatGPT launched in November 2022, 100 million users in 2 months, the fastest product adoption in the history of consumer technology. The valuation went from $29 billion to $80 billion to, as of early 2025, $300 billion, and then, in early 2025, a new round valued it at just under $300 billion again, before a late 2025 restructuring pushed estimates past $800 billion. At those numbers, the capped profit structure became a legal fiction. The nonprofit parent technically still existed, but real power, capital allocation, product direction, compensation had migrated entirely to the commercial entity. And in October 2025, OpenAI announced it was completing its transformation into a public benefit corporation. The nonprofit would remain, but as a minority shareholder. A charity had just become a corporation, with $800 billion at stake. Let me show you exactly how this mechanism works, because it is more specific and more deliberately constructed than most people realize. Imagine you want to build the most powerful AI in the world. You need 3 things: compute, which means tens of thousands of expensive chips running around the clock; talent, which means the best researchers in the world who can choose to work anywhere; and capital, which means billions of dollars before you generate a single dollar of revenue. Here's the problem. If you're a for-profit company, all 3 of those things are extremely expensive. Top researchers demand equity. Venture capital comes with strings. Compute from Microsoft costs market rate. But if you're a nonprofit, everything changes. Researchers join at below-market salaries because they believe in the mission, not the equity. Donors write checks that are tax-deductible, meaning the US government effectively subsidizes a portion of every dollar donated. And Microsoft, looking for a way to compete with Google in AI, structures a deeply favorable compute partnership because the nonprofit framing reduces reputational risk. You're not funding a competitor, you're funding humanity. This is the foundation. Nonprofit status was not an idealistic constraint, it was a subsidy mechanism, and it worked. Now here is where the machine starts to extract value from users. Once ChatGPT launched, OpenAI had something that no nonprofit in American history had ever built. A direct consumer product with mass adoption, 100 million users in 2 months, and those users were not paying yet. The free tier was the trap, not a malicious trap, but an economic one. You got used to the product. You integrated it into your work. You built workflows around it. You recommended it to colleagues. And then OpenAI launched ChatGPT Plus at $20 a month. This is a standard platform playbook. It's how Spotify did it, how Dropbox did it, how every major SaaS company does it. Create dependency on a free product, then monetize the dependency. The difference here, the thing that makes this specific story different from every other tech platform story, is that OpenAI built that user base using nonprofit infrastructure, tax-exempt status, subsidized talent, favorable compute partnerships built on charitable credibility. Then it flipped the switch and monetized the user base it built under public trust. The subscription revenue now goes to a for-profit entity. The nonprofit parent gets a minority share, and Microsoft, which invested $13 billion and counting, is first in line for returns. Let's talk about Microsoft for a moment, because this is where the machine gets very specifically expensive for everyone else. Microsoft did not just write a check. It structured its investment as a combination of cash and compute credits. meaning it agreed to provide OpenAI with massive amounts of computing power through its Azure cloud infrastructure. In exchange, OpenAI committed to running its models on Azure, exclusively for the most part. This means every ChatGPT query you run is generating revenue for Microsoft's cloud division. Every API call a business makes to OpenAI flows through Azure infrastructure. And Microsoft's $13 billion investment at an $850 billion valuation represents a return that could exceed $100 billion. That is not a passive investment. That is a structural position at the center of the AI economy. And it was built on a foundation that started as a charity. The attorney in the Oakland courthouse put it plainly in the opening days of trial. Microsoft bet $13 billion on a nonprofit, and that bet is now on trial. Now, the trial itself, because what is happening in Oakland right now adds a layer to this story that no amount of investigative journalism could have produced. Real testimony, under oath, from the people who were in the room. Elon Musk spent 3 days on the stand, April 28th through April 30th. His core claim: he conceived of OpenAI, named it, recruited the essential early personnel, and provided $38 million in donations, all based on a founding commitment that the organization would never be for profit. His argument is not that he was cheated out of money. His argument is that a charity was stolen from the public. He is asking the court to unwind the conversion, to force OpenAI back into full nonprofit governance, and to remove Sam Altman and Greg Brockman from their leadership positions. He is seeking up to $134 billion in damages, not for himself, but to be redirected to OpenAI's nonprofit foundation. OpenAI's counter is straightforward. They say Musk left in 2018, walked away from the organization, and then founded a direct competitor called xAI 2 years before filing this lawsuit. They say this is not a public interest case. It is a competitive attack dressed as a charity defense. And here is where it gets complicated. Under cross-examination, Musk acknowledged that xAI, his own company, used a process called distilling to train its Grok model. Distilling means using the outputs of an existing AI model to train a new one. In other words, Musk's company trained on OpenAI's technology. The man suing OpenAI for betraying its mission used that mission's outputs to build his competitor. Neither side has clean hands, which is exactly why the structural question matters more than the personalities. On May 6th, this week, the trial played recorded video testimony from Mira Murati. Murati was OpenAI's chief technology officer. She was, briefly, its acting CEO during the 72 hours in November 2023 when the board fired Sam Altman and the entire company appeared to be in freefall. She left OpenAI voluntarily in late 2024. She is not a Musk ally. And under oath, she said this: Sam Altman was creating chaos, saying one thing to one person and the complete opposite to another. He pitted executives against one another. He sowed distrust among the senior leadership team. Now, and this is critical, Murati still wanted Altman to stay as CEO after the board fired him in November 2023. She pressed the board for a fuller explanation. She was not calling for his removal, but she is confirming under oath in a federal proceeding that the internal culture of this $800 billion organization, during the years it was making its most consequential structural decisions, was being run by a man who operated through deliberate misdirection and manufactured conflict. This is the crack. The restructuring that converted OpenAI from a nonprofit to a public benefit corporation, the October 2025 decision that is now the central target of this lawsuit, did not happen in a vacuum. It happened while the organization's own senior leadership was operating in an environment of chaos and distrust, by the account of one of its most senior insiders. The board that approved the conversion, the board that decided to make this organization worth hundreds of billions of dollars to private investors, was working with incomplete and deliberately obfuscated information from the man driving the decision. And Sam Altman has not yet taken the stand. Here is who benefits from the conversion. Microsoft's $13 billion investment, structured under nonprofit partnership rules, is now positioned for returns that could exceed $100 billion at IPO. The nonprofit partner arrangement, which gave Microsoft favorable terms precisely because it was a charity deal, has been superseded by a commercial structure that looks far more like a standard tech investment. Sam Altman, who owns no formal equity in OpenAI, a fact that has puzzled observers for years, has been negotiating a compensation package that would give him a meaningful stake in the for-profit entity. The conversion makes that possible. Under nonprofit rules, it was not. And the broader investor class, SoftBank, Tiger Global, and others who poured capital into OpenAI at billion-dollar valuations, needed a for-profit structure to ever see a return. An IPO requires a corporation. A nonprofit cannot go public. The conversion was not a philosophical evolution, it was a financial prerequisite for the people who needed the money. The person who was supposed to benefit from the original structure, every American who uses AI, is now the subscriber. Remember that $852 billion figure from the top of this video? Here's exactly what that number means for specific people. Daniel, the QA tester in Columbus, the one paying $24 a month because his employer told him AI fluency is now a job requirement, is paying a subscription fee to access a product built on charitable infrastructure. Infrastructure his own tax dollars helped subsidize through the nonprofit exemptions that funded OpenAI's first years. In 10 years, at current pricing, that is $2,880, paid to a company that told the world it was building this for him. Sarah is a freelance content strategist in Austin. She pays for ChatGPT Pro at $200 a month, because that tier gives her the advanced models she needs to compete with larger agencies. She did not choose this subscription. Her clients started expecting AI-assisted output. She adapted or lost business. $2,400 a year, and rising, OpenAI has already raised prices twice since 2023. Marcus teaches high school in Detroit. His district signed a Microsoft Copilot contract, Copilot being Microsoft's AI product, built on OpenAI's models, running on Azure infrastructure. The district pays per seat licensing. That cost comes out of an education budget, which means it competes with textbooks, staffing, and building maintenance. The nonprofit that was supposed to give this technology to humanity freely, at cost, for public benefit, now extracts rent from a Detroit public school. And then there is the researcher, the PhD student at Berkeley, who used early versions of OpenAI's tools in 2020 and 2021, freely, openly, because the nonprofit made those tools available as a public good. Those same tools, scaled and refined, now sit behind a paywall. The public benefit era of OpenAI ended when the subscription economy began. These are not abstract policy victims. They are the people the original charter named, unconstrained by a need to generate financial return, for the benefit of humanity as a whole. The trial in Oakland is asking whether those words were legally binding. The answer will determine whether any charitable commitment to public technology can ever be trusted again. OpenAI was not stolen by accident. It was converted by design, step by step, structure by structure, from a public trust into a private asset. The nonprofit shell did not fail. It was used. It was used to attract talent who believed in the mission. It was used to unlock tax-exempt donations from people who trusted the promise. It was used to negotiate favorable terms from Microsoft, whose billions came in under the moral cover of a charity partnership. And once the technology was proven, once the user base was built, once the valuation reached a number that changed the calculus entirely, the structure was quietly unwound. Elon Musk is not the hero of this story. He trained his own AI on the same technology. He is suing a competitor as much as he is defending a principle. But the principle is real, and it belongs to everyone who was told this was being built for them. The charity didn't fail, it was liquidated, and the proceeds went to everyone except the public it promised to serve. If this is the first video you've landed on, this is what we do here. The story underneath the story. Subscribe to American Ledger Journal. Hit the bell so the next one finds you. And if this gave you something worth passing on, send it to someone who needs it.